Everybody, welcome to another edition of Midas Letter RAW. And I'm here as usual, as usual, with my very good friend and co-host, Senor Edward Mileski, Polski Ogorki himself.
Eduardo.
How are you, Eduardo?
I'm fine. Thanks for asking.
How was the drive today?
Yeah, nice. Not very much traffic at all.
No?
Yeah.
No, good.
Yeah.
So today we have a somewhat interesting show in that we have Abdallah Nasser. Now, Abdallah is the Director of Engineering and Network Development for Orange. Orange, the company that was formerly France Telecom, which now is a global telecommunications behemoth. You like that word? Behemoth?
I love it.
And it trades on the New York Stock Exchange under the symbol ORAN, trades on Paris or the Euronext under the symbol EPA, and no, that's the exchange. ORA is the symbol, and it has a $37 billion Canadian market cap. And the reason we're talking to him is because
what's the market cap? I'm just kidding. I was just thinking, what's the market cap? And you answered the question.
There you go.
I'll be out of a job soon.
You will.
Okay.
You will. Anyways, so Orange has partnered with our client NuRAN Wireless, and NuRAN Wireless has just gotten debt financing and all kinds of other aspects of what they need to build 122 towers in Cameroon. Now, each of these towers generates a ridiculous amount of revenue. They've only built and got 10 in operation so far. Supply lane logistics have slowed them down a little bit, but they are going to be up and over 100 operating sites in no time. They're basically...
Are they talking revenues? Are they talking numbers?
Yeah, I'm going to put up a slide a little later.
Okay.
After we do the interview with Abdallah, that shows you their projected revenue going out 6 years based on 25% subscriber saturation per tower site. Now, so far, when they launch a new tower, they're averaging 37% subscriber sign up. So their projections are modest at best by at least 10%. So that's an interesting story.
What's the population of Cameroon?
27 million, I believe.
Oh, I'm impressed that you knew that.
Well, because I talked to Abdallah the other day. 10 major cities.
Yeah, that's a concern, right? Obviously, more people, the more money they can make.
Yeah, absolutely.
How many people live in Cameroon? None.
So also we have Jeff Parks joining us. He's the CEO of Stack Capital. Now, this is a TSX Venture listed issuer that has raised a lot of money at a great valuation and is taking positions in companies that you normally would not be invited to. For instance, they did an indirect investment into SpaceX. Now,
really,
who wouldn't write a check for an investment in SpaceX if they had the chance?
Yeah. Would they have invested in Rivian, for instance?
Well, we'll talk about Rivian a little bit later. We don't have the CEO on the show yet, but he'll be here within a couple of weeks. Also, Jonathan Sandelman joins us. He's the CEO of Ayr Wellness Inc.
Okay.
Trades on the CSE. And now Ayr Wellness is actually one of the largest cultivators of cannabis in the United States.
Okay.
And Jonathan Sandelman is a capital markets guy who sort of comes to this whole thing. They launched later. They weren't around in 2014-15, but they have quickly come out of nowhere they're trading at like $24 a share or something like that.
Wow.
Yeah. So great show today in all of that. We're going to take a few audience questions. And what else are we going to talk about?
We're going to look at some charts. We're going to look at some commodity prices.
We're going to talk, we're going to look at the Bitcoin phenomenon, which is still raging out of control. It's like
it seems to be catching
despite the fact
traction
that the indication was that Joe Biden was going to sign $1 trillion infrastructure bill, and embedded in that infrastructure bill was going to be the modification to the IRS statute 5061, wherein all transactions over $10,000 must be reported to the IRS. Name, rank, serial number, address.
And that didn't happen.
Did happen.
It did happen.
It did happen. Whoa. So it's happening. It's happening right now. Joe Biden has signed it. Now it's going through the process. But so I thought, so this happened on the weekend last week, and I thought, well, when that gets signed, that's going to take the wind out of the sails of the crypto market. It didn't. It lit a fire under it.
You know what? Speculation is a dangerous game.
Well, I'm happy to report I do not understand what is going on in crypto. I do not understand it. There is irrational exuberance.
A lot of great investors would say that if you can't understand it, don't put money into it.
Stay away. Well, this is the thing.
Yeah.
I think I do understand it, and I'm staying away, because what I do understand about it is there's a whole bunch of irrational exuberance around this idea that this is going to replace the monetary system.
Yeah.
And all the kids who are investing in it are like, well, you old guys don't understand. This is how it's going to go. And they don't understand that, no, this is the way it's always been. And just out of sheer desire and the ability to program your own money, you're not going to change the geopolitical landscape quite so easily. You're actually playing into a plan by the developed world central banks to launch their central bank digital currencies. By creating this experience of using digital currencies, they're creating a generation of people who want to use digital currencies.
You know, what happens if, like, people like myself, this generation, and the people around this, they die off, and everybody forgets about the financial system.
Well, I don't know. Yeah. Well, so
it's going to change over time, right?
So the thing that keeps the monetary system status quo over generations is the largest families that pass the largest capital pools down to each other through the system of inheritance. And so unless those guys start trading in all of their US dollar and euro denominated investments and start trading in crypto, it's never going to happen. And the other thing that I would say is that the currency of a nation is as much a part of the identity as the nation is the geography and the people of a nation. So I don't see nations giving up their national character. I don't see them giving up their geographical borders, and I don't see them giving up control over the currency, because control of the currency is control of the people. That's just my 2 cents.
Well, you seem to know a hell of a lot more about this than I do.
Well, I'm thinking about it all the time because it's driving me crazy. Why? Because the real store of value against hyperinflation should be gold and silver. But gold and silver, despite the fact they're doing well now,
but they're still range bound, right?
Exactly. That's a good. They're still trading in range. Let's take a quick look at this gold chart here. Here we go. Okay. So So well, let's
look. It has a bit of a move there.
Yeah.
You can see that it's broken a couple previous highs.
Right.
Too early to tell, right? But we all expect gold to move.
Right.
Yeah,
the last 2 years is where things changed for gold, right? So prior to this move...
That's an interesting looking chart. When you look at it like that,
yeah,
that move looks a little more significant right now.
And that's important because when you look at gold, you got to look at it in bigger time frames, right?
You're dead on this, James.
Yeah.
And you got to look longer time frames because look, there's so many periods where it's in a bear market.
Right.
And years. You know what? I'd like to look at. I'd like to look at the copper chart with it because.
Okay, well, tell you what, I'll compare. So yeah, good call, Ed. Like that's. This is the interesting thing is that copper basically follows gold most of the time, but in that move up back here in September 2007. This is 2007. Copper led the gold move. It started earlier.
Yeah.
And it led. Then it fell behind. And gold and copper were basically correlated from 2009 to 2011. Then copper got cheap, gold got cheap, and they traded sort of in parallel, but correlated nonetheless, until things changed for gold back here, and gold led copper. So that's interesting to me. In the long term, the dynamic between gold and copper from an economic perspective has changed. Gold is leading copper.
You know what? It's going to keep changing.
I guess it is. And we still won't know what the hell's going on.
We still won't know what will happen tomorrow.
So, but the thing is here we are in this inflationary environment, hyperinflationary from a perspective of monetary inflation, and aggressively inflative from a price perspective. The consumer price index came out yesterday and it was 6+% in the last quarter. So like 6% is like way higher than the 2% target that the Fed's been saying. So now they're forced into this position where they have to talk tapering because that's what they've said. They're only doing all this quantitative easing because they can't get the inflation rate to 2%. Well, now here it is at 6% and you're still printing.
What number? Some number came out that was, they're expecting 0.6 increase. It came in as a 0.9 increase for the month.
That was the producer price index.
Yeah, that's a 30, we're talking numbers now that are 30-year highs.
Yeah.
30-year highs.
Well, this is the thing.
And no politician wants an unhappy constituent,
right?
Because of inflation.
So this is the thing we're in right now. You've got the Fed transmitting that this is transitory and we've got it well under control. Right. You've got copper and gold both transmitting that, oh no, you don't. And inflation is here.
Oil's playing the game.
Okay, well let's add oil to this mix here.
Wow.
But it's interesting that everything's correlated.
So we got three distinct, almost 45-degree angle lines moving here in the last. How far does that go back? A year?
This whole chart?
No, the right from that where it started trending up. From there, yeah.
So this is March 2020.
Okay, so right around the time the pandemic started.
Yeah.
That was the bottom.
Yeah.
And then all hell's breaking loose.
Yeah.
Yeah, well, remember, oil went negative for delivery. That.
Yeah.
Jesus.
Yeah. So, anyways,
okay, well, there you go.
There you have
That's
it.
how you do your analysis, folks.
There you have it.
By the seat of your pants.
That's right. Making it up as you go along.
Yeah.
Our first guest is NuRAN Wireless related. It's not NuRAN Wireless. It's Abdullah Nassar is his name, and he's the head of network, director rather, of Orange Cameroon. And as I said earlier, Orange is a $37 billion global behemoth that was formerly France Telecom. Abdel Nassar is the Director of Engineering and Network Development, and he joins us now to talk about why the deal with NuRAN in Cameroon is so important for Orange, so important for Cameroon, and I'll let you draw let the audience draw the conclusions for the importance to NuRAN Wireless. Trying to spit all that out. Here's Abdullah. Abdullah Nassar joins me now. He's the Director of Engineering and Network Development for Orange in Cameroon. Abdullah, welcome.
Thank you very much for having me.
Abdullah, could you perhaps start with a description of Orange for our subscribers who might not be familiar with this global behemoth?
Well, I will try to explain briefly what is Orange in terms of a group and Orange Cameroon, the one of the operators or the affiliate operating in Africa. In terms of the group, we are a French company or a French group based in Paris. We are operating in Europe, in Africa. We have one operation in the Middle East, in Jordan, and in the Caribbean. Beside Orange, we have the Orange business, which is worldwide. We have offices almost everywhere in the world. Plus that we have the major operations in terms of operator and telecom licenses. They are based in Africa. We exist in North Africa, East Africa, West Africa, and also part of a very minor operation in South Africa as well. For Cameroon, we are the largest operator. We almost have 12 million. We are equal as MTN, which our competitor into the market, and we have the largest 4G LTE coverage in the country.
Mm-hmm. Interesting. So, what is the total size of the addressable market in Cameroon, and where else in the African continent will you be looking to expand to?
The main focus for us is not only to be the largest, also to be the largest and to be the best. So if I need to talk about, or if I will talk about the Cameroon in terms of the population, it's 23 to 24 million based on the latest statistics. And as it's very well known that in Africa, one subscriber or one client for any operator is not only one SIM card, is twice the size of any other operator outside Africa. This means that the probability of one customer is having our SIM card, having also the same probability that's having also an equal SIM card with the competitor. So being number one in the country, we don't define it by just only the volume of subscribers. We define it by the coverage, we define it by the revenue, we define it by the services. So 12 million doesn't mean that you are number one, because also your competitor could have 12 million equal. So here's the difference. Do we have the same coverage? Do we have the same quality? Do we have the same services? So we are not claiming, we are proving that we are number one from coverage perspective, from quality of service, and also from the product and services we are offering into the market. Okay. The focus for Orange, which was announced by the group president, Stéphane Richard, that we are more right now expanding our presence into the rural area. We are covering all the urban areas. We are covering all the 10 main cities in Cameroon. And right now, since 2018, our focus is to go deeply and more into the rural areas.
Okay, so then who are your competitors in Cameroon?
The main competitor is MTN, the very famous South African operator. In terms of sizing in Africa, they are much bigger than Orange. In terms of the sizing worldwide, Orange is much bigger because we do have, equal to Africa, we do have the same presence in Europe. So this is the main competitor for us in this market and other markets also as well.
Okay. And so you have a partnership with NuRAN Wireless out of Canada. How do you leverage that type of partnership to grow your subscriber base in Cameroon and elsewhere?
So, well, the growth, as mentioned, that since 2018, we are trying to focus to expand the network in the rural area. When we mentioned rural area, this is a specific technology that we are looking for, specific type of deployment, and very, very unique type of investment. So that's why we don't call NuRAN a vendor, we call it as a partner, in terms of the company and investment, because we do have a unique relationship with them. We do have a unique partnership with them, not only in Cameroon, but also another affiliate. I can name it, like, for example, the Congo. They started before the Cameroon, and they have a much bigger size in terms of investment with the Congo affiliate. Right now, back to the Cameroon, the partnership we set with NuRAN is to go with a certain type of investment, certain type of technology, and certain type of sites topology into the rural area. So the penetration with them is to focus where we don't have coverage, where the others, they don't have coverage, and to widely spread and to expand our coverage with them into those specific areas.
Uh-huh. Okay, so then what sort of opportunity still exists in terms of rural development? Like what percentage of Cameroon remains without access to broadband wireless?
Well, the opportunities are very, very big. When we talk about Orange, we immediately, especially in Cameroon, we immediately think about the mobile money. We are the biggest mobile money service provider in the country, and we are almost equal to giving a service as a bank in terms of mobile financial services. So the main reason going into the rural areas is to try to help the economy and to help the ecosystem to have a better penetration, not only telecom, but also other services. Remember that when we talk about the rural areas, we talk about areas, the main activity agriculture, the main activity is farming, the main activity is plantation. And if they don't have an access to certain telecom infrastructure, this means they don't have an access to any financial services. Okay, this is the main target. Why are we pushing too much with NuRAN to go into the rural area, to try to give that type of service, not only the telecom, but also beside of that one, the financial services, which is based on Orange mobile money services. Also as well, we are trying to develop, next to the telecom and the financial services that we would like to offer in the rural area, the broadband that is almost at the development, right development track with NuRAN.
Oh, interesting. So then for the people of Cameroon, the absence of wireless internet equates to the absence of access to the broader economy and the opportunities inherent in that.
Yes, the telecom in Cameroon is not only broadband and internet services and telecom services, the classic voice. It's also equal to financial services also as well. So,
I see. Interesting.
yeah.
Then, so then, how does Orange distribute its broadband signal into Africa? Like, what is the back channel? What is the main trunk? Do you have fiber? Do you have satellite? Do you use cable?
Yeah, this is the main pain, especially in Cameroon. So, yeah, it's when we talk fiber, we talk about rapid development, we talk about rapid growth. Unfortunately, we don't own fiber. The fiber is owned by the government. There is a monopoly by the Cameroon Telecom, which is the represent the historical operator in the country. So they own the fiber and they control the fiber. So in terms of the backbone, or let's say the transport between the cities all over the country, it is the infrastructure of the government, and we are using this based on a certain contract and a certain capacity. The difficulties is the rural area, they don't have the accessibility of the fiber, they don't have the infrastructure of the fiber. So mainly right now, we are deploying with NuRAN the rural technology via VSAT, but we are developing also a backhauling via LTE networks. So this is new technology that we are trialing for now. We are using different vendors, and I can name it also. We are using Nokia LTE network to backhaul, which is the first sites are already live on air. And this is the main achievement that we are aiming to have in NuRAN. To all the rural sites will be backhauled based on LTE technology and not based on a VSAT connectivity. If we can succeed to have this technology spread all over the nationwide, all over the network, then easily we can deploy rapidly the NuRAN technology on all rural areas where we have the LTE coverage.
Sure. So do the governments of Cameroon and DRC make investments in this program, or is it up to Orange and NuRAN to source the capital required to develop these sites?
Well, I need to differentiate between to separate between the Congo, DRC, and the Cameroon. In Congo, somehow there is a flexibility to invest, to put fiber, and there is a lot of players. They do have a lot of players in the market that they are offering their own fiber, not only the government. So, okay, for Cameroon, it is only the government. It is only Cameroon Telecom who have the right and the license to deploy the fiber, especially between cities and the backbone fiber. So the LTE 700 backhauling, it is an Orange investment. It is an Orange test. And we are just only the operator and only let's say it, the player in the market that will present this technology to support the growth of the rural. Without this technology, it will be only VSAT, and we know all the limitation of having a VSAT connectivity, or we have to wait the fiber to arrive to the site, which is a very long, non-strategic, development. So that's why we took the initiative, Orange, with our vendor, one of our vendor, which is Nokia, to develop this backhauling technology, and we will offer it to NuRAN to rapidly grow the rural coverage with them.
Mm-hmm. Interesting. Okay, Abdullah, that's a great introduction. I'm very happy to have your participation. I thank you for your time. We'll come back to you soon and follow up. Thanks for your time today.
Thank you very much.
You bet. Bye for now. So NuRAN is also a company that is going to, its stock performance is going to be correlated to its financial performance starting next year. So it's coming out of development stage and is going into, it is in commercial production.
To tell the viewing audience that, because that's when it really starts to count.
So while we wait, obviously there's going to be a little bit of selling off here. They did have a delay with the receipt of batteries to build a total of 48 towers. They got 10 up. The 11th one is going live next week. The rest of the batteries have arrived in the country. They're going to have 122 towers in Cameroon by next year, and they're going to start putting them up in the DRC. So it's really a company that is transforming from development stage into full commercial operation. And that's the opportunity that makes me say that this is a good level to come into this company. Again, we have an option on this company. I haven't put any money into it yet, but I will.
You know, many times you hear about companies like this and nothing ever happens.
Yeah.
You know, very, very, and now you're talking to people like Orange, $30+ billion US capitalization. This
exactly.
is, they're not, you know, they're not going in there with their
they're not
eyes
small
closed.
change.
Well, you know what?
They're not chicken feed.
They obviously think this is something very, very important.
I believe they do. Let's talk about Tesla and Rivian, shall we? So
Lots of action.
I think
$200 drop in Tesla.
Yeah.
20%.
And a doubling in share price for Rivian practically. Well, let's see right now.
$78. It's now
116.
Okay.
So 116, so just shy of a double. I got to think the stars could not have aligned better for Rivian, that they come out on the day that their biggest competitor's CEO has to announce that he's got a tax problem and needs to sell a bunch of stock.
A lot of that money probably went into Rivian.
I'll bet you a lot of people said, fine, Elon, you sell your stock.
Okay.
We'll see you later.
Thanks for the run.
We're going to Rivian now. We're going to try,
Well,
we're going to take Rivian for a test drive.
I don't think, they say that Elon Musk doesn't have much cash lying around. Like, he's not a kind of guy to...
Well, if you had that kind of money, have you ever heard of a security-backed line of credit? So basically, security-backed line of credit is, I'm your bank. I say, well, how much in securities do you have? And are they, on a reputable exchange?
Yeah,
he says,
Tesla.
well, I'm Elon Musk. I own Tesla, and I've got, the lion's share of the stock.
320
billion. And the banker says, oh, okay, well, tell you what, you can borrow as much as you want, anytime you want, and we'll charge you, what's the Fed looking for? 1.4? We'll give you 1.4%. In fact, we'll charge you 1.4%. And so, it's like...
got all the money he wants.
Exactly. So I'm sure out of his salary, he can service a loan. So really, and when you think about it, you go to buy he's even sold his big mansions as buying modest real estate to take the heat off of that attention on his wealth. It's like he is living a charmed existence.
Well, he seems to be a guy that doesn't come along very often.
Yeah.
Can you imagine all the people in Detroit, where the automotive capital of the United States is, sitting around saying, well, why didn't we get into this a little earlier?
Yeah.
Was it that obvious? I mean, remember GM did kill the electric car back in...
Tesla, when it got started, Elon Musk was not anywhere to be seen. He was not a founder of the company. Elon Musk came in as an investor after the company had been struggling along for 2 years. And he came in first as a large investor, and then a bigger investor, and then he made himself the CEO, and then he basically...
I did not know that.
Yeah. No, he had nothing to do with the founding of Tesla. Nothing. He's an early investor. That's it. I'll tell you, Elon Musk is a promoter first and foremost, a technologist second most, and maybe a nice guy. I don't know. I've never met him, but yeah, you gotta really look at what he says, and you gotta compare it to history, unfortunately. Anyways, so that is Rivian's opportunity.
Editorial time, folks.
Yeah. Not that people in glass houses shouldn't throw stones. So
nobody's perfect.
Nobody's perfect. Exactly. It makes me like him better that he's such a great promoter. Anyways, so now we want to switch gears a bit and talk about Canadian cannabis stocks, because in the U.S., Sarah Silver and what's the other guy's name? The funny guy.
Seth Rogen.
Seth Rogen. Yes, Seth Rogen. Yeah. And Sarah Silver? Yeah. Basically, they've been out talking up the fact that, cannabis needs to be legalized. That has created a swell of rumor in there that has, let's take a look at my list of U.S. stocks that I follow in the cannabis space.
Right.
And you can see a constant theme here. They're all really...
lifted.
Yeah. The long-suffering trend that has gone on since they all peaked out in February of this year has finally... reversed meaningfully. This could still be a dead cat bounce.
Yeah.
If the legislation doesn't materialize and it goes silent.
I see you've got Bollinger Bands in there, those blue lines.
Yeah.
Well, the one thing you'll say is even in a downward trend, it goes from the lower band to the upper band.
Yeah.
You saw it back in there. every few months, right?
Yeah.
But the big trend's down, and now we're back to the upper band. So you might see it correct back. The question is, will it
Yeah.
continue down, or will it bounce, not go down as far?
Here is a company that I think is probably going to do very well here. Ayr Wellness, obviously riding the wave.
Look
Look at their share price.
The TSX Venture, just as an aside, has been really putting on a head of steam. Like, it's moved up about 15% in the last 2 months.
Well, so lithium and cannabis and crypto are all driving that. Those are the main drivers. Ayr Wellness, $28 a share. Look at that. Why is that?
Now, what was the high?
$1.6 billion market cap. What was their all-time high?
Yeah.
It was back here in February, just like all of them, $46.65. So if legalization,
half basically.
Yeah, if legalization kicks in, these stocks are all going to blow through those February highs, and it could be game on for the cannabis space again.
Yeah. Well, I think they got to be performing.
Yeah.
I think it comes back to cash flow.
Yeah, always. So anyways, my next guest is Jonathan Sandelman. He's the CEO of Ayr Wellness, and here's what he has to say. Jonathan Sandelman joins me now. He's the CEO of Ayr Wellness Inc. Trades on the OTC under the symbol AYRWF and in Canada under the symbol AYR.A. Jonathan, welcome.
Well, thanks for inviting me this morning.
You bet. Jonathan, let's start with an overview. What is the business of Ayr?
Ayr is a multi-state operator focused solely on the U.S. We're in 8 states, and we're thought to be, because of our previous backgrounds, some of the best operators as well as the most disciplined financial people in this industry.
Mm-hmm. Okay, so tell me about how Ayr came to market. You've got a bit of an interesting history there.
So in 2017, I started to focus on the cannabis industry because it was shown to my family office, which I manage. Initially, when the idea of investing in cannabis was shown to me, I wasn't very focused on it. And after 30 years of being a Wall Street veteran and a hedge fund manager, I've learned simple lessons in life that most of you probably already know, but took me 30 years. That if I stay simply in my core competency and focus on the things that I'm good at, I tend to do well at. And when I get distracted with subject matter or investment ideas that are not core to my competency, I tend to do poorly at. So when cannabis was suggested to me as an investable asset, my initial reaction was not a core competency. I really knew nothing about the market. But what's helpful to me generally in life is when people do suggest ideas to me, because then I tend to start to focus and get educated. My typical investment style is to do a tremendous amount of research because I'm a very disciplined investor, and I've been, throughout the 30 years, a good steward of capital, and I've driven shareholder returns. So I did the work. It became super interesting to me because I saw the Canadian market do extremely well. I compared those values to the US values, and the US values seemed incredibly cheap, relatively speaking. And then I asked the question, why? Because simply because an asset is cheap doesn't necessarily mean I invest in it. I have to understand what is creating the cheapness and whether there's catalysts to change that asset from cheap to rich. And in this case, Jeff Sessions, who was our former Attorney General, was threatening people who invested in U.S. cannabis. But the reality was, if you looked at his budget, he didn't really have the budget to go aggressively against U.S. cannabis. He could only talk to it. So I called it simply the regulatory misperception arm. There was a perception he could put us all away. He actually didn't have the ability to do that. Therefore, the U.S. assets, in my mind, were artificially depressed, and that I should focus on it and start buying those assets. Now, you got to pick your horse, right? You got to pick the vehicle by which you do that, because that's what I've done my whole life. And what I determined is to use the SPAC vehicle. And if your investors are less familiar with that, I can go into about a 30-second description of that. You tell me. But I thought the SPAC was the best way to do it for several reasons. No one had ever used a SPAC in cannabis before, but I've been a financial engineer my whole life and understood that the math that's embedded in that would be the best way for shareholders to make money. So went up to Canada, said it to the investment bankers, I want to sell in Canada, basically doing an arbitrage, right? Selling to the rich, enthusiastic market that was going on in Canada at the time to buy those depressed assets in the US. Just a simple relative value trade.
Jonathan, so we are familiar with SPACs, and our experience with SPACs is that, well, the experience of the whole cannabis sector now, relatively speaking, over the last couple of years is one where we're riding yet another wave of discounting going on, a revaluation to the downside. Part of that arguably stems from the lack of definitive moves by the Biden administration toward the decriminalization federally, towards a national program of regulation of cannabis. But Ayr Wellness is generally recognized as one of the largest scale cultivators in the US. So how does this downturn affect shareholders in a company that was a SPAC previously relative to participants in other structures that might have not been so well capitalized at a cost per share basis in the early structure?
The interesting thing about my original business case when I entered the market, because I'm a finance person and understand financial discipline, what I told the investors while I was raising the money, that I'd be EBITDA and cash flow positive day one. Because I understood, remember the enthusiasm back in 18, right? The market was just charging up every day, right? But you and I know, and your investors know, that the markets don't simply go from the left quadrant to the right quadrant in a straight line, that the markets do correct. And if you don't have EBITDA and cash flow, when those markets do correct and access to capital gets tight, which is occurring right now, okay, prior to Friday's rally, access to capital is getting much more limited for the best, most disciplined operators in the industry, which if you're on the right side, buying the right companies, the idea of consolidation, which we all knew was going to happen at some point, has been pulled forward by at least a year, if not more. So the way we think about it, the cohort of investable companies is shrinking. And therefore, most companies will become uninvestable because they won't be able to sell stock because the market is down in equity, and they won't be able to raise large-scale capitals to continue to build out their businesses. And so if you lack the original premise that I spoke about, being EBITDA and cash flow positive, you probably today are outside the cohort that has access to capital, and therefore we're at the moment you're either an acquirer or you're the acquired.
Right. That's both an opportunity for you as well as a sort of evolving benefit to the shareholders of Ayr.
I built this company for this day. Okay. Again, we talked about it day one. Well, everyone was over their skis when I was EBITDA and cash flow positive. The market did correct, and we had Cannabis 2.0. And I did 13 transactions after waiting 13 months after the original 5 companies, because the market came our way, because we saw the lack of discipline in people's balance sheets and how aggressive they were and how they would need capital and they would have to fund themselves when the market turned down, which is not when you want to do it. I think we're at a very similar time today where maybe 5 companies become the acquirers and the rest get acquired.
Wow.
Now, the issue, though, a lot of the larger companies have a very large footprint already. So the overlap between one company and another is so overwhelming because many states restrict how many licenses you can have, that a lot of the largest players will have difficulty taking advantage of the lack of liquidity and the consolidation that will occur. I think, this is just one person's opinion, being an 8-state operator with an excellent balance sheet and excellent financial discipline, we at Ayr are uniquely positioned because we won't have massive overlap to be able to slingshot from an 8-state operator to one of the top operators. So luck is by design. You always need to be lucky. But because we stayed on our vision, our discipline, and because the markets got pulled forward in terms of when consolidation was going to occur, and it always was going to occur, we get fortunate to be in this position, and so do the Ayr shareholders.
Mm-hmm. Interesting. So then does the patchwork regulation of the state by state that sort of precludes the ability to conduct interstate commerce as a result of the lack of a national policy, does that benefit a company like Ayr, or is that an impedance? And are you sort of waiting for the day with bated breath that there is a national strategy?
Well, if we think about national strategy, let's start in the beginning. That can't occur until cannabis is no longer a Scheduled I drug. Does any of your listeners really believe that cannabis and heroin are equally as dangerous?
I wouldn't think so.
Right. So there's several things that our politicians need to do and our society needs to do to reschedule this drug, right? Reevaluate our policy on the war on crime. Make it so that this once-in-a-lifetime land grab to build one of the great CPG industries is shared by more than a handful of people. So there's a lot we have to do before we even start to think about interstate commerce. And that's what we're focused on. You know, I hear my competitors sometimes talk about, oh, the top 5, there's a moat around us and we're the winners forward. And, you know, I used to listen to that. And then as I heard it more and more often, I started to actually get upset by that. And not because maybe at that time we were outside the top 5, which you don't know me well, I'm an insanely competitive person, but it's because I don't like the sound of the word moat. At Ayr, we don't build moats. We build bridges. And we don't want this to be a land grab. There's too many people in this society that have been disadvantaged by this drug and now shouldn't be on the outside and be able to benefit again from this insanely interesting high growth industry. You know, I laugh to myself, and I said this in an investor call the other day. In Nevada, at the real heights of COVID, there's 25% unemployment, yet our stores growth, retail growth was growing. And remember, our folks, our patients, our customers can't use their credit card. They have to pay cash. So I was thinking to myself, 25% unemployment, retail sales growing. What is occurring here? How are they able to do it? And the fact is, Do you think people stop buying cannabis to pay their cellular phone bills? Do you think people stop using cannabis to pay their cable bills? It may be that during that period of time, the customers were turning off their cable or cellular to come in our stores because of the anxiety that was happening in society at that time because of COVID. So when I think about cannabis as an opportunity, yes, I miss cable. Yes, I miss investing in the internet, right? Yes, I missed the investment in cellular. But maybe it turns out that cannabis is bigger than all of those three. And maybe it is the single best growth industry of our lifetime.
Wow. Well, that's really intriguing, Jonathan. I would love to spend more time talking to you, but we're out of time today. I really appreciate your participation, and I look forward to talking to you again in the future. Thank you so much for your time today.
Thank you. Have a good day.
Thank you. You bet. Bye for now. So that's one of the cannabis companies you want to be watching in this big industry reversal. Who else we got? What else we got, Ed?
You know what I heard on the company you were talking about that's in the mushroom business? It's called Pathway.
Compass Pathways, yeah.
They were talking about it yesterday. I guess they came out with their numbers.
Oh, yeah?
And they were excellent numbers, but the stock still got pounded.
Is that right? Compass Pathways, it's NASDAQ traded. So, yeah, boy, did it ever get walloped.
Yeah,
Look at that.
There you go.
Holy slap in the face.
That came out after the market. Well.
Huh.
Anyway, there you go.
Boy.
Hey.
Well, I guess...
you like making money, and all of a sudden you say, I'm going to wait one more day. And maybe a bit off a little more.
Well, so it obviously got talked up leading up to the financials by somebody. I don't think it would be the CEO because he's a very cautious and...
Yeah, but where are they now? Where was it at the beginning of that move a month ago or so?
Peaked at 49.62.
And now it's 20.
And it was down here, it was 28.66.
And now it's 30-some?
And now it's 34.50.
There you go. Well, that's a haircut.
That's a bit of a haircut. Yeah. Well, we'll get our old friend, Mr. Goldman, on and hear what he has to say because he's a regular guest on the show. Okay, next up, Jeff Parks, CEO of STCK Capital Group, joins us. Jeff Parks joins me now, CEO of STCK Capital Group, trading on the TSX under the symbol STCK. Jeff, welcome.
Thank you very much for having me today.
Jeff, why don't we start with an overview? What is the business of STCK Capital Group?
So we recently IPO'd the other day, and we have a pool of capital that we raised on the TSX, and we're going out there and looking for 15 to 20 different names to put in the portfolio. So we're looking to democratize access to those big private unicorns for people.
That's intriguing. So is your platform, are you an investment issuer, first of all?
We are a corporate issuer out there on the TSX.
Okay, interesting. So give me some examples of some of the transactions to date of the kind of that represent sort of what you're targeting.
So far we've deployed capital into 3 different names. One being Bolt Financial, which is a one-click payment processor. 3 years ago, a patent came off of the one-click checkout experience for Amazon, and Bolt has basically capitalized on that in democratizing it to other individual e-commerce sites out there. So a lot less friction when you're checking out on different e-commerce sites. And there's Varo Bank. Varo Bank is a neobank in the US. They just raised around $500+ million on their Series E at around a $2.5 billion valuation. And they're out there trying to give the 184 million individuals in the US a bank account that they can use with very little fees. So they're the only neobank in the US that actually has a charter. And then lastly, we put in indirectly into SpaceX, which I think the name speaks for itself. Very, very powerful company.
Sure. When you say indirectly, how does that work?
So we ended up buying through a special purpose vehicle that has exposure to SpaceX. So that's how we got our exposure to SpaceX and our underlying holding company.
Right. So these are obviously investments of a blue chip nature that individual investors, retail investors normally wouldn't get a chance to invest in. So does that mean that these are earlier stage pre-IPO generally?
So if you look at the J curve, we're staying away from the seed, we're staying away from the early. What we're focusing on is the growth in late stage. So companies that have proven product market fit and companies that are kind of 6 to 36 months away from when we think they're going to IPO.
Okay, so the risk is limited.
Yeah, the risk for us is really valuation risk. What are the multiples that we're paying for these businesses, and can that growth sustain? And if that growth is sustainable and we can grow into that multiple, then we're happy.
Sure. And then to what extent do you expect your share price to be correlated to your net asset value?
Yeah, so we think over time that comes in line and potentially trades at a premium to that underlying book value per share, as there's a scarcity value to those underlying assets. It's very hard to get access into these late stage IPO unicorns.
Yeah, no kidding. I've actually written to Elon Musk on multiple occasions, volunteering to participate in Tesla, Boring Company, SpaceX. For some reason, I don't even get a reply.
I can understand.
Yeah. Well, that's great. Then, so this is sort of a unique beast on the TSX. Is it, as an investor, is it better to sort of view this as a sort of like an ETF or like a mutual fund or like a merchant bank?
It's kind of like a hybrid of all three. In the whole reason we wanted to create this was, if you look at the fund world, generally having private investments in those funds, individuals will be locked up for 3, 5, 10 years. But we wanted to give people that liquidity. And that's great with the underlying stock, where if you want to buy more, you're able to. If something changes in your life, you have that flexibility through the liquidity out there in the market.
Mm-hmm. So if these companies were to pay dividends, would you stream that out to your unit holders?
We would look to reinvest that capital to grow that book value per share over time.
I see.
And a lot of them too, we would probably not expect them to pay dividends just because they're all focused in on growth. So less likely on the dividend front that some of these companies will
there's
pay.
no income strategy component to this investment.
All reinvestment of capital and to grow that book value per share.
Sure. Okay, and then in terms of your own cost of capital and access to capital, what does that look like from your perspective and from one of your investors' perspective relative to, say, an individual investor going out to leverage a attempt to invest in these companies, assuming they could?
Yeah, I would say it's very, very difficult to get access into these underlying companies. It takes a lot of experience and a big network of individuals to garner access into this space. And then you obviously need larger ticket size. So that's why we here wanted to, I'd break it down to fractionalize, liquidize, and democratize. So you can take smaller pieces of capital and have exposure to these underlying positions within your own portfolio.
Mm-hmm. And so what was the sort of impetus for the creation of this company relative to, like, what is your background? How did you come to this point where this is the best thing you have to make best use of your time you have every day?
Yeah, so I come from the hedge fund space, been there for 10 plus years. And the one thing that I saw was a lot of funds are trying to give, it used to be 45 days liquidity, then it was 30 days liquidity. Now everyone's going over to the liquid alts, which pushes those underlying funds into larger cap investments, be it the Amazon, the Facebook, and the Google. I needed a structure where you could focus in and can take on that duration risk of having those private companies in your portfolio. And it's very hard to do that if you have a 45-day redemption time or a 30, or even down into 1. And I also saw a trend out there in the market where businesses continue to stay private longer and longer. They can sit there, they can get the capital in the private market, and there's a lot of return that's being had in the private market that a lot of individuals don't have exposure to. So that's why we wanted something that democratized, where anybody can get access into it, whether you're an individual retail investor, your hedge fund, mutual fund, or pension.
Mm. So are your perfect investments all generally US, NASDAQ, NYSE listed names?
Yeah, for the most part. So my background comes from North American investing, so that was my bread and butter. So we'll mostly focus down in the U.S. There's some Canadian companies that we have looked into. We haven't pulled the trigger on any yet, but predominantly U.S. based.
Sure. as a market participant of lesser scale, but still, a regular participant, I look at the valuation of NASDAQ and NYSE listed tech companies, and you can't deny the fact that it's been driven largely by the activities and the actions of the central bank of the United States, who continuously has been essentially underwriting the continuous rise in value as they seek to achieve the wealth effect, which they make no secret of. My question is, does the value proposition for an investor in Stack Capital break down? Should the Fed reverse course on that, as they've been intimating they're going to?
So the big thing for us, you're definitely right. What's the elephant in the room? It's rates. If rates increase, obviously multiples come down on stocks. And that's why it's so imperative that you sit there and you buy right. And you have that sustainable growth where if you are paying a higher multiple, you will grow into that multiple over time. So that's what's great about our backgrounds is we come from the stock picking background where we're analyzing all of these different businesses and we make sure that we buy right, that if rates do go up, then we don't take too much of that duration risk with those underlying portfolio businesses.
So in accessing these sort of white shoe investments, do you have a value proposition to the issuers that make you guys a good strategic partner?
That's a great question. So we've ran into a number of different businesses where, as opposed to just taking conventional venture capital money, they like that we have come from the public side and they like that we've been in the trenches through an IPO. So we've actually gone, raised the money through the banks and brought it out to the public market, which is very beneficial for them. They also like that we can give them a perspective on, do you go through a SPAC route or do you go through an IPO? That's very, very beneficial for them. And then lastly, we've been able to introduce some of our portfolio companies to very large businesses that can actually utilize their underlying product. So that's another way that we're able to win on these deals.
Mm-hmm. So I guess, I don't know how to say this without seemingly to put you a bit on the spot, but I mean, as an investor, I'd want to hear from the CEO is what is the target rate of return? I mean, you've just gone public, so there's no sort of performance history, but what is your conceptual target rate of return annually in this type of an investment that would attract my capital investment?
Yeah, so because of the underlying businesses that we're dealing with, a lot of them are high growth. So we are trying to target a 15% plus compound annual growth in book value per share over time. And obviously that can be lumpy based on underlying individual positions, whether they IPO this year or 2 years from now, but that's what our goal is over time.
Sure. And then is your focus then, are you planning to stay technology focused, or is it more a case of whatever is thematic at the time?
See, it's fantastic because we come from a generalist background. So we'll look at absolutely anything. Now, I will give an exception to biotech because we don't want a phase 3 trial and the binary risks of something works or doesn't work. But predominantly right now, as we're looking at the market, there's obviously a lot of software as a service that we're looking at. Fintechs are a very, very interesting space. The content creator economy, very, very interesting space. And same thing with in the healthcare industry as well. So we're industry agnostic. We'll look at just about anything.
And finally, are there any Canadian companies in your sort of research universe that you are considering an investment in?
We have looked at 2 in the past that were very interesting, but more so we're seeing more opportunity in the US versus Canada right now, just in terms of the growth, in terms of the multiples that you're paying. So.
Sure. And then what are the big catalysts in 2022 that you expect to achieve on behalf of shareholders?
I think you'll see more capital deployed in 2022, and there might even potentially be some liquidity events from underlying portfolio positions as we see them progress internally.
Okay. So then if you're constantly needing to access capital, I know I said finally, but these questions just keep occurring to me because I'm interested.
Yeah, please.
Is there, how do you manage the expectation for dilution risk by shareholders?
Yeah, so for us, we're really focused in on compounding capital organically. That's coming from the fund space. That's what is the highest priority. compound that capital internally, and then if there's underlying positions where you did need more capital to take on that underlying position, you do have that ability to tap the markets. But we're cognizant of where our share trades in regards to the book value per share. So we'll only do that opportunistically if we see certain positions that we want to capitalize on.
Okay. Well, that's intriguing. I could talk to you for quite a bit longer about this, but we're out of time for now. I would like to come back to you in due course. Thank you very much for your time today.
Thank you very much for the time. Thank you very much for having us.
You bet. Anytime. Bye for now. So this is, this is a how it should be done type of company. Okay, $12 per unit, half a warrant with a full warrant costing $15. Okay, so this is an interesting story in Investment Executive, and this is the business model of Stack Capital. And this is basically what they do, is democratize access into the private equity asset class. So in other words, these guys invest in white shoe, blue chip type of investments that you couldn't normally get into. They charge a sort of a management fee structure similar to a hedge fund, but they raise money at a premium. There's no cheap shares out, so there's zero risk of getting laid out.
So this is a genuine, they're doing a real service. They're providing a service.
Yeah.
Providing something that no one else is providing.
Yes.
Jesus.
Yes. This place is going to the dogs. So
Okay.
Thelma wants to talk. This is Thelma the Red Healer, everybody. She's one of the smartest stock pickers in the room.
Yeah.
And pretty good dog. She keeps coyotes and the foxes at bay. This is her sister, Louise, coming up behind. Louise, take a bow. Whoa, she jumps up on the seat. Did you see that? These are my puppies.
Okay.
They are a lot of fun.
All right.
Anyways, Weezer, have you got any stock tips for us? What do you say there?
Yeah, the viewing audience will really lap it up.
Anyways, so that's Stack Capital. So I hope you've enjoyed our show for this week. It's been wild. And we're going to be wild from now on. We promise you. It's going to be great, right, Weezer?
Yeah.
Weezer, what do you got to say for yourself? Come on, now give me some stock tips, will ya? Come on, what do you got? What do you got? Invest in Purina? No, fuck Purina.